How's the market? It's a question I'm frequently asked. And so in this video, I'm going to share some data for Sylvania. And these key metrics will indicate where we are and possibly some indication on where we're heading. Let me start with the number of homes sold. In this past month, July of 2023, we sold 58 homes. And when we look at the previous year in July, we sold 70. So we are down. But what I'd also like to do is share data from the pre-COVID years. Now that we're post-COVID, and we know COVID was really a disruptor in the market, I'd like to go back to 2019, because in July of 2019, we didn't know what COVID was. It wasn't on our radar. And in hindsight, it's a more normal year. Now, I caution to say normal because using normal and housing data is probably an oxymoron. But relatively speaking, so let's see where we are compared to pre-COVID years now that we're in post-COVID years. What it says is we are selling half as many homes this year as we were in 2019. In fact, less than half. And what I can tell you is we are going to end this year as the lowest number of home sales that we've seen in at least 10 years. Unless there's some major upset or change, that's where we're heading. Now, what's going on with prices? Usually when sales are down, prices are down. Prices are reduced so that sales will pick up. Well, let's take a look. If we look at the price per square foot of the homes sold this past July, we're seeing $139 per square foot. And that's where we've been running, in the $130 range. And that is up almost 3% from last year. And that seems like where we're going to land. We're going to end up this year at about 3% of appreciation over the previous year. And that's quite a bit different than you might see in the national headlines. You might see that the overall national rate of increase or decrease is quite a bit different. But we're doing well in Sylvania, we're doing well in the Midwest. We're doing better, for example, in the West Coast and for certain geographic areas like, say, Austin, Texas, which are having some serious depreciation. Not crashes, but depreciation. And when we look at 2019, pre-COVID, we are up well over 40%. Pretty interesting. So is 3% sustainable? I think so. And the longer we're at these modest increases of 3% or less, I think the risk of a housing bubble is minimized. Now, there could be other factors besides prices that'll blow up the market, and I'd be happy to do another video on that. In fact, I plan to do another video on that, but in the meantime, I'm going to move on. One more chart that I want to share is a metric regarding the number of homes selling at or above asking price. I had a conversation with a gentleman a couple days ago, a very nice guy, and he said, you know, in my neighborhood, homes are selling above the asking price. Well, I had to chuckle because he's probably 100% right. This metric says that in the last month, July of 2023, 79% of the homes sold at or above asking price. And that's where we've been for months now. We've been selling at 2/3 to 3/4 of the homes going at or above the asking price. And comparing that to pre-COVID 2019, it was 35%. So it's doubled. We're seeing basically twice as many homes at higher asking prices, still going higher than the asking price. So here's one more metric. It says, again, it reinforces the idea that we are in a strong seller's market. This is from Altos Research, and this is a great website for realtors. They update their data weekly, and they take tons of data from the United States and put it out and publish it. So for our zip code, 43560, so this would include the city and some of the township, but not all of the township areas, they are showing a very strong seller's market. And that's been the case. It has not declined. But if it were to decline, this number would still be in the seller's range. We have a long way to go to get to a balanced market, let alone a buyer's market. So stay tuned. What I would say to you is, if your house is something you need to sell, let's talk. A lot of sellers have golden handcuffs. And what I mean by that is they've got a mortgage. The mortgage is at 3 or 4%, and they don't want to give that up and get a new house that would double the interest rate. And I understand that. But on the other hand, that house may not be working, and there may be some other solutions to minimize the pain. Not eliminate it, but possibly minimize it. So I'll be happy to talk to you about that. Be happy to talk to you about the value of your home. These are just indicators. So the price point you're at, are you at the high end, the low end, the age of your home, all kinds of factors will challenge the value of your home. So I would encourage you to reach out to me and talk if we want a better number, if we want to estimate your home's value. Let's do that. So I hope you found this helpful. Thank you for watching. Hope we talk soon, and in the meantime, go slay some dragons.